National Outlet Shopping Day is back. Join us June 8th and 9th at Simon Premium Outlets nationwide. Score thousands of can't-miss deals from brands you love all weekend long. They've got up to 65% off every day, and the National Outlet Shopping Day deals are even better. Visit premiumoutlets.com/NOSD to find a premium outlet near you. That's premiumoutlets.com/NOSD.
Welcome to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network, and you can subscribe to all of our podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We are recording this episode on Friday, June 7th, and joining me as always, Dr. Orphe Divounguy, PhD economist. Dr. O, the jobs report is hot, came in hot. We just literally picked it up. It was just released about an hour ago, I guess. And the numbers are shocking. 272,000 jobs added in May. Unemployment at the same time went back up to 4%. And that's the first time in a couple of years that we've seen that number. So make sense of this for me, my friend.
Exactly. Make sense of it. It's hard to make sense of. The unemployment rate didn't really, it was 3.97 last month or 3.96 last month. So it didn't really change much. The increase in the labor force is slowing, and that's putting upward pressure on wages, right? So without further decreases in labor demand, wage growth could remain somewhat elevated. The wage growth advanced 0.4% over the month, up from 0.3% in April. And on a year-over-year basis, we have wage growth of 4.1% year-over-year compared to 4.4% year-over-year in April. So we see a slight reacceleration of the wage growth component, and that ought to keep the Fed in a holding pattern, at least until later this year.
Yeah, I'll tell you what, since you brought it up, let's talk about it. So the Federal Reserve is measured. The way that this year has unfolded, not as anticipated, with regard to a reduction in the rate. What, if anything, does this contribute to the Fed's thinking about what it will do next?
Well, look, let's put it this way. It's one jobs report, right? It's just one jobs report. So let's just not make a big deal out of one jobs report, especially given that we had some revisions in March and April, some downward revisions in March and April. But it's still, it will keep them on pause because it will justify those at the Fed who have been, all year round saying, past few months saying, look, we can't cut in this environment. And even for those who have been talking about potentially raising interest rates, that would kind of justify, that would make them feel vindicated. And, personally, I think that the pause is a good idea. Pause and wait is still very much a good idea because it's further slowing in the pipeline. And, if you look at the composition of these job gains, you've alluded to it, right?
Let's talk about that. So let me tee this up for you, and you can walk the folks through it. So in May, healthcare added about 68,000 jobs, and that is somewhat in line with the previous 12 months. Government employment continues to make up a significant portion of the overall jobs. It's 43,000 of those new 272,000 jobs.
If you take government and healthcare combined, that's 40%. That's almost half of all the job gains, right? That's unlikely to be sustained. And then you look at professional and scientific professionals' jobs, scientific technical services, adding 32,000 jobs, higher than the monthly gain of 19,000 jobs over the last 12 months. Look, in the current interest rate environment, this is unlikely to be sustained. You look at the job openings data that we got for the month of April, and you just look at the trend, the number of job openings is decreasing. And the job openings relative to the total number of unemployed job seekers in the United States has decreased. So the labor market is getting slightly looser. It's just not showing up yet, but it's coming. It's on the way there. And it's just a matter of, so I saw an interesting BBC headline this morning that basically said, look, the U.S. job surge casts doubt over interest rate cuts. Look, yeah, you might be thinking this is a strong jobs report, but again, the trend is a labor market that is slowing, that is loosening slightly month after month. And I expect that as we get closer and closer to the election and towards the end of the year, we're likely going to start to see even more loosening in the labor market. And so are rate cuts out of the picture? I don't think so. Inflation is still moving in the right direction. And with inflation moving in the right direction, even though it's slow progress, with inflation moving in the right direction, the Fed will have to recalibrate policy, whether it's one rate cut at the end of this year or starting to move in 2025. It's going to have to happen because the conditions are very tight. By the way, the 10-year yield jumped. Treasury yields jumped on the news, and that's going to tighten things up. The stock market is not expected to be bouncing up from today's news. In fact, what is it? What is the stock market?
Well, the stock market went down to begin the day, but the Dow is up. The Nasdaq is down. Both of them are inside of 50 points up or down. The Dow's up at this moment 38.
Again, and that's the expected reaction. Yeah, I think we're going to see, a crazy reaction on the day, right? So we saw 15 basis points and the uptick in the 10-year yield, but it's going to cool down. Over the next few days, start of next week, you're going to see things kind of ease again a little bit, because I think investors are going to realize that, by the way, more jobs are good. More jobs are good. The thing that was a little bit worrying about this report is the wage growth advance. The big question should be, will we have a continued increase in the size of the labor force, right? In labor supply, to kind of absorb all of that extra demand that we still have out there, is the big question, right? The loosening has to come from an increase in the labor force. And so I think that's what would worry me a little bit about this jobs report is am I going to continue to see some loosening coming from an increase in the labor force, or are we going to have to see interest rates staying higher for longer in order to get the number of labor demand even lower and get the loosening that way? So I would prefer the former. I would prefer to see the size of the labor force increase, to see that kind of loosening, rather than to have interest rates stay elevated for the foreseeable future in order to get demand in line with supply.
I appreciate your insights as always. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other high-quality podcasts at americastalking.com.
National Outlet Shopping Day is back. Join us June 8th and 9th at Simon Premium Outlets nationwide. Score thousands of can't-miss deals from brands you love all weekend long. They've got up to 65% off every day, and the National Outlet Shopping Day deals are even better. Visit premiumoutlets.com/NOSD to find a premium outlet near you. That's premiumoutlets.com/NOSD.